Okay, so we see oil prices tapering a little bit, Brent a little bit below $70 a barrel, but it's been a very sweet year for the sweet crude, nearly 27% gain since the year started. This are part of what we have in our burning economic issues this Thursday. Adimo Kwesa, a member of the economic think tank at Financial Derivatives Company. Quite a long list you have, diverse as well. You got oil, you got telephony. What else is there on that list?
Well, we have oil, we have the Africa Free Trade Pact, which takes effect today, which we also have the FG is going to divest its stake in JV oil assets to 40%. And we also have oil took a beating yesterday. So there are quite a number of interesting burning economic issues.
I'm sure what will be on Nigeria's mind will be if the government will divest from joint venture down to 40%, selling down. That looks like part of what President Buhari's reform agenda is beginning to look like.
Yeah, certainly, because the one-off dividend will be substantial, very substantial, because reducing our stake from about 55%, 60% to 40%, the amount you'd get will be quite substantial.
Sell the shares, get the cash.
Yes, and it's coming at a time when we're under a bit of fiscal pressure. We have this increase in recurrent expenditure from minimum wage review. We have high and rising debt to GDP ratio. So the amount divestment that divestment would bring would relieve a lot of fiscal pressure and will make the fiscal situation quite flexible for the government.
It's music to my ears, and it should be for every Nigerian, because that means that perhaps we could slow down a little bit on our Eurobond for 2019 borrowings. If you sell down on these JV oil assets and we can make some billions of dollars, we might as well clear a bit of the JV, have some cash to play with, because it's our own money. It comes without interest.
Yes.
And that relieves the country's external debt burden.
Yes, but I must point out it's a one-off payment, so we have to invest the funds.
What we do with the money
prudently, yes. And in the longer term, that means that we only get 40% of our revenue from these assets. So in the longer term, we'll derive less revenue from all assets. So we have to use the money very prudently.
We need to use it very prudently. So let's talk about oil prices since the year started. It's been a very good year so far for the oil market. Oil Brent has climbed nearly 30%. But again, we see prices coming down because the trade war between China and Washington begin to upset almost everything.
Yes, there are lots of factors that are driving oil prices, but the main factor we have seen in recent months is this trade war. We have this perception that oil demand is going to weaken because of this trade war. And it's pretty significant because it's coming at a time when there are other downside risks to economic growth. We have the Brexit issue. We have perhaps an emerging market crisis. So that's even why the global recession term is being peddled more fluently. So that is why oil is taking a beating. We saw oil drop almost 2.5% yesterday, but it's up a bit today.
Okay, quite a lot. I'm not sure it's much of a good news for us about the Africa Trade Agreement taking off without Nigeria. The arguments, the jury is still out there, whether we should wait, whether we should just go with the rest and make it work in progress.
Well, I think Nigeria's primary concern is that the country will be a ground for dumping goods. But I think in recent months, the government stance is starting to change. Maybe perhaps eventually to sign on that deal. I think the United Nations has forecast that if Nigeria signs on to that agreement, it could boost intra-African trade by about 50%. And intra-African trade is at a very low level, 17% compared to intra-European trade of 67%. So it is even easier to trade with countries outside the continent than trading with inside the continent. Yes. So it's quite a problem. We need to do something about
that. The train is just about leaving the station.
Yes.
So I don't think we should allow the train get full throttle before we jump. We jump from the platform onto the train.
Of course.
That's my personal view.
Of course.
The train is just moving, and you can still take a lot of folks on board.
Yes, of course.
I think there are only 3 countries left in Africa.
So 3 countries left to sign, but for ratification, the required number of countries to ratify the deal is complete. That's why the deal is taking effect today.
I want to be on the plane when it's...
Yes, it will take several phases for it to be implemented. So
that's a good start today as Africa, intercontinental free trade gets started. Thank you so much.
Thank you.
Adimo Kwesa, a member of the economic think tank at Financial Derivatives Company. But let's check in with the global market space. We're going back to London, our London studios, where Simon Puse is live to us right now to take us through what you call the opening hours of the UK equity and currencies market. The market is still a little bit tepid because of the trade wars. You have heard the rhetoric between China and Washington. Beijing the media, they're reporting that China could use rare earths as a fighting weapon against Washington. That's quite a big story. Everyone is looking at, on one hand, and the Europeans have their own tariff issues with Brussels, with Washington as well. So it looks like quite a very busy time out there, and the markets again getting buffeted by all that. Simon, getting here into this conversation.
Down 1.2.
When your food is cooking, you should add a little salt. You can never go wrong with Dangote salt because it's refined, iodized, and so white, but so nice. You can never go wrong with Dangote salt. Oh yeah, put up, stir up, shake up, cook up. You can never go wrong with Dangote salt.
It's not just salt, it's Dangote salt.
Okay, Simon, my apologies there. Let's get this conversation on you just about talking about, yes, what the opening levels look like for today's trading on the London market. Please go ahead.
The losers was Marks & Spencer's, which dropped 7.4% to 232 pence as investors cashed in on a discounted offer on buying new shares to fund the department store chain's joint venture with online supermarket Ocado. The FTSE 250 ended 258.8 points, or 1.4% lower at 18,946. Retirement Financial Services Group, Just Group, they headed the losers, dropping 8.2% to 54 pence.
Simon, where are we as far as the big company news or corporate news on your market street for today? We have just about 2 days left for the trading week.
Yeah, well, looking today, stocks were moving slightly higher with all eyes on the US Central Bank's #2 official and what he had to say regarding the outlook for monetary policy in the world's largest economy, even as officials from China's Ministry of Commerce said the US bullying will eventually hurt and that won't accept a deal that hurts its sovereignty or its pride. FTSE 100 was up today, 7,209. That's up 0.34%. The FTSE 250 was also up 0.25%. Shares in First Group, that's a train and bus company, they jumped 12.68% to 124 pence today after revealing plans to sell off parts of its bus business. Also today, Britain's finance minister warned that those in his party vying for Prime Minister Theresa May's job, that a no-deal Brexit would threaten the UK's cohesion, and that they should tone down irresponsible spending pledges. This is ahead of that leadership contest. This is the Chancellor of the Exchequer, Philip Hammond, and he's refused to back any one candidate, but he says his concern is to make sure that there is a voice in the competition representing the views that he holds, and that we need to resolve the Brexit impasse in a way that protects businesses and jobs. So there's more news on that later today, and I'll be back with the latest markets and equities news later this afternoon.
Yeah, we will look forward to that from you and the rest of the team out of our London studios. Thank you so much, Simon Appiuse. Let's take a break. We'll be right back.